philanthropic capital I want to underline. So our developmental needs, considering the large population that we have, is huge, and we need funding from all sources. In fact, there's an estimate of NITI Aayog of 2020 which said we needed 6.2% additional spending of GDP to achieve 2030 SDGs. We are committed to UN SDGs, and this fall up because of COVID. So this is one important thing to understand. So we need patient capital, we need capital from all sources, we need loads of it. And second context is, now let's talk about philanthropy, let's talk about non-profit sector. We have a very vibrant non-profit sector. We have 252,000 tax-exempt NPOs. 50% of them are very small ticket size. The top sources of funding are CSR, grants from various foundations, and our activities of these NPOs generally resonate with SDGs. The cumulative, and another interesting, relatively recent development is, as India has grown, the economy has grown, we have more and more high net worth individuals, more and more affluent givers who are interested in philanthropy, and who are interested in philanthropy with a purpose. It is not just, they want their money to go to a good cause which can contribute to development. It's a more enlightened philanthropy, if I can say. You have a doing good index. This index focuses on India, on the Asian markets, and basically this talks about how good is the environment for private capital to flow into the social sector. It tries to measure that, and it has four benchmarks, four performance clusters. So India is on the third one. We are doing okay, but on the top is China and Singapore, and and then there's the doing better and doing good. But it's just an indicator of Indian economic scenario and the need for funds. Second, we saw the non-profit sector. Third is, we have a fantastic securities market infrastructure. Our market cap to GDP is over 130%. Let me tell you, the Indian finance professionals or securities market professionals, they are in great demand both in Wall Street and in the Wall Street. They are respected. If you go to Wall Street, you will find a number of finance professionals there as well. We are today amongst the top 5 markets. We have world-class institutional infrastructure. We have, for example, T+1 settlement today, which very few markets have. If you are trading today, you are assured of securities or funds on the next day basis. We are rated very well by various external assessment bodies, IMF, World Bank, ISO, and so on. In short, we have tremendous capabilities and experience in the securities market space. Now the question is, so just to give you a little background, I'm sure some of you would know this, there would be a social stock exchange which would be set up in India, was announced by our finance minister a few years back. I think it was a 2019-20 budget speech where this would be set up, and it would be set up under the auspices of SEBI. So when this proposal came to us, we were frankly not very sure, because we don't have the experience and the capability of dealing with the non-profit sector. We are used to dealing with big listed companies, brokers, and so on, but not the non-profit sector. So we thought, are we the right agency for doing it? These were self-doubts we were having, but since it came from the government, and we took it upon ourselves, and we asked these questions, which are listed in this slide. Can we leverage our securities market infrastructure for the benefit of the social sector? Can we facilitate raising of funds by social enterprises within the securities market domain? Can we develop some new structures and mechanisms? Can we redevelop, recustomize some of our existing products? Can we create associated? So basically, we thought, can we leverage our capabilities and capacities for the benefit of social sector through something called social stock exchange? So what understand this at a conceptual level? Otherwise, you basically this graph is this Venn diagram just conveys it all. So you have securities market on one hand, you have social sector needs on the other. The intersection is social stock exchange. It's something like the stock exchange, the securities market, is a capitalistic institution. It has come from Europe and US. So basically, I like to call it capitalism or a capitalistic institution shaking hands with socialism, in some sense. This is the intersection of commerce and philanthropy. And that is what we are trying to develop. Also, sometimes people may get confused that it's like five blind people, visually challenged people, trying to define an elephant. It's a fan, sphere, snake, tree, what is it? So, I'll come to that detail now. So basically, I think let me first explain, it is not a new exchange that we are setting up. It is going on the existing stock exchanges, and both NSE and BSE have already set up the social stock exchange. It's not a new exchange that we're getting into. It puts purpose over profit. Again, it links to the sustainability side. If you ask me to summarize what is this experiment about, just three words will capture that. Transparency, accountability, trust. We are just trying to build more transparency, more accountability, more trust in the non-profit segment through the social stock exchange mechanism. So it's a separate segment, it transcends conventional understanding, it is a holistic view, structures, mechanism and processes. Framework is developed after extensive stakeholder consultation. Key pillars. So we will run through the details little fast in the interest of time because we have to cover sustainability also. So suffice it to say, let me not get into the details, otherwise we'll get lost. So each of these has a hyperlink and each of this is a slide, so I'll not go into those specific details. Eligibility criteria, there is certain eligibility criteria for coming on the platform. So one can come in two ways. One can register. Register means you are agreeing to make certain disclosures to the exchange on an annual basis. You may or may not raise money. Second tier is you would list. And when you list, you will have to issue an instrument called zero coupon, zero principal instrument that we will see in a bit. There is registration criteria. There are disclosure requirements. So let me just quickly show you this. Vision, target statement, strategy, management, operations and so on. Let me very quickly just take you through this. So this is a very important slide. What are the activities which are eligible for the purpose of listing? So these are 16 broad eligible activities which we have actually culled out from SDGs, our own national priorities given by NITI Aayog, and there is a schedule in Companies Act which talks about where the CSR money can be spent. So it's a combination of all the three, and then of course these activities have to be geared towards underserved or less privileged population or less privileged geographies, and then the 67% of the activities should be going to the target population. So which means 1/3 of activities can be anything else. So it's a hybrid sort of a structure. We are keeping corporate foundations, political organizations, religious organizations, and infrastructure and housing companies, except affordable housing. We are keeping them out of this for the time being. So I think let me jump to the capacity. Some another important detail. Minimum investment now is 2 lakhs, and minimum amount that can be raised is 1 crore. These were higher thresholds, but we are based on our, as you said, we listening to people. We are used to very large numbers. Otherwise, then it's not a number game. We need to get more and more more traction on this, and we have to recognize. See, if this we used to debate in our committee, and Matthew was also there, one member of our advisory committee. So we used to debate how can an instrument like this, can it benefit a non-profit working for the tribal welfare in Madhya Pradesh? That's the real challenge. How can the market help the last mile? So that's the challenge.
That will be the real transformation.
That will be the real transformation. So, zero coupon, zero principal instrument, this is very interesting, and I would like to spend a quick minute on this. So basically this we struggled with. We had set up 2 committees, by the way, to help us in this journey. So idea is, when you list on the exchange, since you are students, how do you list? Anybody want to answer? If you want to raise equity or debt, how do you list? What is essential for listing? Anyone? You need a equity share, or you need a debenture to list. So similarly, here for the purpose of raising money, you need an instrument. So we came up with this idea of ZC, ZP instrument, and idea is zero coupon, zero principal instrument, no financial return, it's only a donation certificate for all practical purposes. However, it comes with a promise of social returns. You see the last circle here in this slide, with the promise of social return, and we requested government to notify this instrument under securities contract regulation rules, so they have done that. And I think probably we are one of the few jurisdictions, I'm not aware of any other, where this kind of instrument, where the promise of social return is there, has been recognized in law as an instrument to enable raising of funds. Another very quick point on social stock exchange. See, this has been tried in some other countries also. This is the last slide, and we'll move on to the third strand. It has not really succeeded in many countries. And reason is, so we have thought through the entire ecosystem, because when you list, you need a disclosure metrics. We've described that. When you list, the investors will have faith only if those disclosures are verified by a third party. So we brought in the framework for social impact assessment. Now you can say, where are the social impact assessors? So we are training them also. Our sister institute, National Institute of Securities Market, they certify the assessors. So 2000, in fact that is coming here. Okay, let's go through it quickly. This has already been set up, around 100 unique NPOs have been registered, over 2,000 professionals have passed certification, ZC, ZP issuance by NPOs, 10 have been listed, and total fund raised is 22 crores. In fact, I stand corrected, I was saying 14, so it's actually more than that. Impact assessment standards being revisited. Capacity building fund, that's another very important piece. See, we are mindful that the small NPOs will not be, fully equipped to deal with exchange requirements. So there we brought in the concept of a capacity building fund, which has already been set up. NABARD has agreed to be the nodal agency for that. NABARD, SIDBI and other institutions are helping. Our target is quite ambitious. We want a 1 billion fund. Some fund has been created, and the idea is to facilitate smaller NPOs to list on this exchange with the help of that fund. This is another important piece for the success of this social stock exchange. We have advisory committees to help us. As I said, we were not the experts. We depended on the expertise which we borrowed from expertise available in the social sector. Indicators for success: it should emerge as a top channel for donors and issuers. It should unlock new capital for the social sector. It should drive social impact to the last mile. I think we should add that here. So let me pause here and take the final piece, not final, we have one more, but yeah, just third piece now, problem and the context. you know this, right? Wayanad. You know what is happening in Gujarat, right? So how the things have changed in the last 20, 30 years on the climate front. In 1990, this is just a cartoon. We expected to see wildfires every 100 years. That was what was the expectation in 1990. In 2000, it's 50 years. 2010, 20 years, and now it's next year. I mean, we are seeing it frequency go up. Brazil, these are Amazon forests. So our vulnerability as a country also is pretty high. That's what this slide tends to project. And if you see droughts, extreme temperature, flood, landslides, storms, wildfire, all of these, as in the recent year, you see those graphs are actually extending out. It's not a very good sign. So you may ask, what is SEBI doing in this space? How is our regulatory perimeter extending? So let me give you that perspective first. I'm not a sustainability expert, but I can give you the financial regulators' perspective on this. So our job is that when investors invest in securities, they have right to information. We are a disclosure-based regulator. So now, if the risks relating to sustainability are going up, so we feel that the company should make disclosures to that effect. That's where we come in. So it's the non-financial disclosure space that we've entered into. And our journey in this space started way back in 2012 when we told 100 companies, top 100 companies of stock exchanges to disclose business responsibility reports. And this, of course, I will maybe, in my meeting, I'll take you through that. But it is about, as a financial regulator, it is about risks and opportunities, the disclosures around that. Economic impact of climate change, again, there are different estimates how the economy, how the GDP would be affected. And the worst prediction which I have here is coming from the RBI report, which says that due to the physical risks which we are witnessing now, which are happening, as much as 9% of GDP may be affected. There are transition risks, physical risks, and the financial effect of those risks, disclosure of which becomes important. So I'm not jumping into these because it needs more time. Of course, the companies which are on top of the game, they have opportunities in the sense that they can achieve cost efficiencies. If you are sensitive on ESG issues, you can attract talent. Today, a lot of youngsters want to work with the more evolved, more ESG conscious companies rather than just working anywhere. They may settle for less financial compensation, but they like to go for companies which are creating more impact and which are more ESG sensitive. Competitive advantages, it of course enhances your reputation, brand value, and so on. What are the driving forces in sustainability? So the way we see it from the financial sector perspective, the investors are the main driving force. In fact, regulators and governments came little later, but investors in the West, in European countries or in US, they were already asking for, there was no regulatory requirement at that time, but they were insisting on disclosures on what is company strategy on sustainability issues. And they were willing to write the check only if you were environmental conscious, if you were conscious of the social issues and so on. Customers, and as I said, regulators and governments, now almost every country is moving towards, we started with voluntary disclosures, comply or explore disclosures, but in India we've had compulsory and mandatory disclosures. So we require disclosures for top 1,000 companies. So in this slide, the institutional investors is linked with the previous slide. There's an increasing push by them on the issues of climate change, human capital management, and governance issues. As you can see, these are the parameters they look at when they invest in the company. Let me do just
citizens of the future.
Who am I? I'm going to be buying what you're going to be making. I want to know you're making a better world.
I'll give my money to the one who never robs the earth.
I'll spend my fortune on you if you promise to think of the less fortunate too.
I want to know you're making a more equal world.
I'll invest in your technology to put a man on Mars. But wait, why can't it be a woman? I'll click on your app, I'll walk into your shop.
As long as you're fair to the farmer and the scrub. I'm gonna be buying what you're gonna be making. And if you make the world a little better too, no one will feel richer than you.
Citizens of the future. Now define.
You don't really need a lecture on sustainability. It just says everything you need to say. It talks about equality, it talks about diversity, it talks about fairness. And that's all, and caring for the world, caring for the environment. That's all it is about. And the point is, it is not that regulators, governments, or the companies are driving it. It is society which is asking for it. So it is a change which we are all, going through. But we are all doing our bit where we are, and we are trying to contribute to this. So I am mindful of time. Can I continue?
Yes, we have about 10 minutes.
Oh, we have? Oh, okay. Because I thought 4:30. So we'll okay, 10 minutes then.
Yes.
Yeah.
10 minutes more.
Sure. So, as a regulator, as a financial markets regulator, we are concerned with, as I said, that the disclosures should be there and disclosures should be reliable. If you look at the trend, global trend, we have global, so world is asking for, or the multinational companies are asking for, we need one common language, one common global language. We don't want to be making disclosures. India wants something, Singapore wants something else, US wants something else, Australia has something else. Give us one common, there's been a lot of demand for one common global language when it comes to sustainability disclosures. And the solution is ISSB standards, International Sustainability Standards Board. They came out with their global baseline. But we have, in fact, we were already working on it. As I said, we started on this way back in 2012. In 2021, we completely re-engineered our disclosure template, and we call it Business Responsibility and Social Report, BRS, Sustainability Report, BRSR. And on the right hand side, I've tried to give you the trends in various countries. You don't need to really bother reading that. The broader trend is shift from voluntary to mandatory. Every country wants mandatory disclosures. That shift is already happening. In India, as I said, we started in 2012. We extended it to top 500 listed companies in 2015. 2017, integrated reporting. 2019, BRR was extended to top 1,000 companies from 500 in 2015. 2021, we completely re-engineered. What we have is, earlier report was a qualitative light touch report. The new report is quantitative. It has about 800 data points. Now the latest initiative that we've taken is, as I said, the disclosures which are made should be credible. So we are trying to bring in the requirement for assurance on those regulators, on those disclosures. To that effect, we also have to be mindful of the cost of making those disclosures, the ease of doing business. So we have carved out some essential disclosure parameters from our BRSR template, and we call it BRSR code. So we would require, and that is only 42 parameters. So we would require disclosures on those 42 parameters to be assured by a third party. And also the disclosures for value chain partners. So very consciously followed climate plus approach. In fact, in Europe, in most of the geographies, you find a lot of focus on climate. We are, of course, our template covers climate-related issues, but considering our social disparities, our income inequality, we thought it would be good, considering our society and our economy, we should have a climate plus approach where S and G are equally important and not just the E. We have 9 principles. There are some, and these 9 principles have actually, they've been developed for detailed disclosures. There are essential indicators which have to be disclosed, and there are leadership indicators which are voluntary, which one may choose to disclose or not. Then there are, as I said, a lot of data, 800 data points, quantifiable. We've also allowed interoperability of reporting in case companies already following some recognized disclosure template. One could just cite that and also basically cross-refer instead of making all the disclosures all over again. And it is applicable to top 1,000 listed companies. These are details. I need not bother you with these details, but basically, okay, let me spend a quick minute on this. Environmental related disclosures, we are focusing on GHG emissions. Scope 1 and 2 are essential disclosures. Scope 3 is voluntary, that is a leadership indicator. Air pollutant emissions, waste generated and waste generation and waste management practices. If you are operating in ecological sensitive areas, disclosures relating to that. Recycling, reclaiming. On the social and economic side, conditions of employees, the difference between the wages of an average worker vis-a-vis a CEO, the human rights, community, consumers, and conduct. A wide range of issues. 4 I have already explained to you, so I need not. Now let's talk about greenwashing. So this is another concern.